There are a lot of folks out there who believe that, yes, things can be intact for the medium to longer term, but still have some of the short-term volatility that we've seen. The problem is, Jay, we just haven't seen it since, like, November, really.
No.
So is this something to be scared of right now?
I have to echo Jim's sentiments. Yeah, we've come up back-to-back quarters of 10% gains. It's only happened 8 times since 1950. 5 of the next 7 times we've actually been up the next quarter. We're coming into April. We've been up 16 of the last 18 Aprils. But yes, things are a little overdone. The 10-year just broke above 4.35%, and you had a nice chart on the 10-year. You did a great job
all the way
up
back
on the
to
board.
November.
Yeah, back to November. Where was the S&P 500 trading in November? Under 4,800. So we've digested that slow rise in the 10-year, and that's the key word, slow. So what Jim is talking about kind of leads me to my word of the day, where I think we're going to go over the next quarter or so.
And what is that word of the day?
We're going to churn. Churn, baby,
that's a
churn.
good word.
Yes.
That's a good word.
Yes.
Not subscribers we're talking about. We're talking just markets overall.
Markets overall. What we've seen is a rotation. And last week, if you just looked at it, the 3 leading sectors that have always been technology, discretionary, communications over the last 12 to 18 months, they were the laggards. Utilities led. We saw energy as the top sector, and then financials. So that rotational theme is going to continue. It's not going to be exciting, but you know, there are exciting things under the surface. Materials was up 10 weeks in a row. We didn't talk about that because NVIDIA was up 11 weeks in a row, but we're seeing it. And then the sector that I like, the financials. The financials are set themselves up for a nice run as we head into that lull, as we churn into earnings season. I think the financials are going to lead us.
All right, so financials, there's a lot of them out there. Banks, non-banks. Even, let's just stick with the banks.
Sure,
is it the mega cap money center banks like JP Morgan City, Bank of America, or is it the regional banks that have been a little bit more unstable?
It's a combination of both. I think there's opportunity in the regional banks. But let's focus on the big ones first. JP Morgan, cream of the crop, leading the way. I think that is the diamond that you just want to hold and have in your portfolio put to the side. But then you look at the other names. Goldman Sachs. 5-year weekly chart. Look at this thing. It's just breaking out to all-time highs. These are the setups we like. These are the setups we saw in the overall market in some of the technology names that made those full roundabouts and then broke out. This is a setup I like. So Goldman looks good. Wells Fargo looks good. Citi under Jane Fraser's leadership, they streamlined. They cut 20,000 jobs. The financial sector cut 60,000 plus jobs last year. You know, last year was the year of efficiency, according to Mark Zuckerberg, and what he did with Meta. We're seeing that in the financial sector, but no one's really talking about it. But price action starting to lead us that way. And then the regionals, you know, we're back to where we were last March during the financial crisis. And it looks like they're about to go. So PNC is a great name I like there.